It all happened so fast. One moment, the world was watching numbers climb higher and higher, and the next, everything changed in the blink of an eye. Bitcoin was soaring at $126,000, shattering records and making headlines across the globe. People felt rich, their investments growing daily. Social media feeds were filled with stories of overnight millionaires and wild predictions. It was a digital gold rush, a party that seemed endless. Everyone wanted in, and the excitement was contagious. Then, in October 2025, the market nosedived. The euphoria evaporated almost instantly. Bitcoin plummeted over 13%, falling below $105,000 in just hours, erasing weeks of gains. Panic spread as alerts buzzed with massive losses. Phones lit up with red numbers and urgent warnings. Altcoins like Ethereum and Solana crashed even harder, their values tumbling in a matter of minutes. A bloodbath ensued, wiping out $20 billion. Portfolios shrank and dreams dissolved in a tidal wave of red. Investors' dreams turned into nightmares. The sense of security vanished, replaced by fear and disbelief. Screens once filled with joy now showed financial ruin. News anchors struggled to explain the chaos unfolding live. Panic selling accelerated the crash, creating a vicious cycle. Each sale triggered more fear, and the spiral deepened. Exchanges were overwhelmed, leaving everyone asking, "What just happened?" Support lines jammed, and withdrawals slowed to a crawl. The digital gold rush screeched to a halt, leaving confusion and financial pain. The party was over, and reality set in. The crash was a stark reminder of the market's volatility. Fortunes can be made and lost in a heartbeat. The question lingered, how did it all fall apart so quickly? In the aftermath, everyone was left searching for answers. Why did the market crash? What could have possibly triggered such a dramatic downturn, sending shockwaves through the financial world? It was a perfect storm of troubling events that spooked investors everywhere, creating a sense of panic and uncertainty. Tensions between the US and China escalated rapidly, with a trade war brewing and both sides refusing to back down. A shocking new tariff on Chinese tech goods rattled global markets, leaving traders scrambling to react. Investors everywhere feared a major global economic hit, making riskier assets like crypto suddenly seem even more dangerous. For months, US policies had fueled a false sense of security, lulling many into complacency about the risks. Pro-crypto government moves drew in a wave of inexperienced investors, eager to cash in on the hype. The August policy allowing crypto in retirement plans raised the stakes even higher, putting more money on the line. High prices, excessive borrowing, and mounting geopolitical fears all set the stage for disaster. The China tariffs were the final spark that ignited the collapse, sending markets into freefall. The market's shaky foundation finally crumbled, catching everyone off guard and leaving investors reeling from the fallout. The crash wasn't just numbers on a screen. It devastated real lives, leaving a trail of heartbreak and uncertainty in its wake. Investors watched their hard-earned savings vanish in an instant. Dreams of financial freedom and security suddenly shattered. Many had hoped crypto would secure their future, putting faith in a new financial system that promised opportunity. "My crypto life is over," trended online, capturing the widespread despair and sense of loss that swept through the community. Retirement funds tied to crypto were hit especially hard, leaving many older investors facing an uncertain future. Stories of lost savings circulated everywhere, like a factory worker whose entire retirement was wiped out overnight, with no warning. Leverage trading magnified losses for many, leading to forced liquidations and even deeper financial wounds. A software developer lost everything in a single day, watching years of effort disappear with a single market move. Hundreds faced million-dollar losses with no chance of recovery, their financial stability gone in a flash. The crash was a harsh lesson in the dangers of borrowing to gamble, as debts piled up and hope faded. For many, the financial pain was irreversible, affecting not just their wallets, but their families and futures. The human cost was a sobering reminder that behind every chart and coin, real people bear the risks and consequences of crypto's volatility. The crash reignited the debate on crypto in retirement accounts. Critics, including senators, warned of exposing savings to volatile markets. They argued most savers aren't expert traders. Public interest groups called for protection against scams. Supporters argued for financial freedom and potential growth. They advocated for education over prohibition. The debate highlighted the tension between protection and choice. Post-crash, the future of crypto is uncertain. The crash was a reminder of market fragility. Some see it as a healthy reset, clearing excessive risk. Institutional interest remains, offering potential stability. Optimistic forecasts exist, but volatility is a constant threat. Investors must brace for wild swings and manage risks carefully. The dream of quick riches persists, but so does the risk of loss. The path forward is bumpy, with fortunes and losses both possible.